Hello, everybody. Welcome back. This is Christopher, founder of Rehab Reserves. Today, we're going to be going over how lenders evaluate the borrower's potential when it comes to applying for personal or business funding. So, number one, lenders are always going to evaluate the risk associated with an application they receive. So, to break that down, they're going to look at number one, first and foremost, your personal credit. That obviously the credit score is a mixture of things. That comes down to obviously payment history. That's the most heavily weighted attribute of your personal credit. So payment history on all open and closed accounts. Number two, what do those accounts look like? What are the original balances? Taken out, what's the current balance? Credit limit, what's the max amount that you've actually carried on that given credit limit in the past. You might have a $20,000 limit, credit card, but maybe your highest balance on that card has only been $2,000. That will obviously play a role versus if you had $18,000 as a highest balance in the past, it's been paid off in full. That's a much stronger position to be in. Lenders can obviously see past history in that intricate detail. And also too, it's going to be taken into account when you're applying for business funding, time in business, the industry of your company, your business credit, which if you haven't done so already, Nav Prime, great resource and tool to review your Experian business, Equifax business, Paydex score, SBFE score. Business credit is very similar in the way of personal credit. So if you apply for personal credit, right, or not apply for personal credit, you apply for something on the personal credit file, and it's going to evaluate obviously how diversified your personal credit is in making that decision. Same thing applies on the business. If you're applying for a business credit card or a business loan, your business credit is going to be evaluated by the lender, and obviously your personal credit too. But if you, let's just say, don't have anything under your business yet, no business credit history whatsoever, it's going to be much more difficult to get approved for a business loan, especially if you don't have financials to back up the application, versus a business credit card to at least get established, get the ball rolling. And obviously a business credit card that gets approved for a larger limit, more times than not, is because there's a comparable account on the personal credit file. So to break it down a little bit further, if the highest personal credit card limit you have is, let's just say, a $3,000 limit, that's the highest personal credit card, you can't expect to get approved for a $40,000, $50,000 limit business credit card if you don't have something similar in comparables on the personal credit, right? Because we've seen clients that have the highest personal credit card is $17,000, and they get approved on the business side for $25,000, $27,000. So it's still fairly competitive with the amount they get approved for. But if that largest card was a $3,000 or $5,000 limit, they're not going to get approved for a $25,000 to $30,000 limit. They might get something between an 8 to maybe 12 or 15 at the very most limit on the business side. So it is important to keep that in mind when you do apply. Timing is everything, making sure the balance is currently updated on your personal credit file, taking into account utilization. We've discussed that on previous videos. And then also too, making sure that you have consistency across the board with your name, business name, the address of the company. If it's a home-based business, that can, in a lot of ways, look more risky or not as professional to the bank when you're applying. So if it's possible, you have an actual physical business location, like a business suite, or maybe you want to get a virtual business address where you can receive mail and products, like a credit card could be sent there and then forwarded to your home address. That could also help the application. It's not a make or break, but just something to keep in mind. And then also too, when you're applying for a business loan or a business line of credit, either one of those products where you're actually getting access to cash, either lump sum in the form of a loan deposited to a checking account, or a business line of credit that you can literally pull from, just like a checking account, transfer money from that account to a checking account, or send wires, issue checks. Those two products, the loan and the line of credit for the company, those applications, unless it's paired with an SBA application, which that's a whole another discussion, but those applications require some meat on the bones for your company financially. So you bare minimum at least have to have one business tax return showing cash flow, meaning the business is actually making money, not that you had $200,000 in top line gross revenue, but you didn't even break even profit wise, right? Your expenses met or exceeded the actual gross revenue. You would need to show a profit, which banks like to see minimum 5% profit margin. So if you did $200,000 in gross revenue, you at least want to be able to show that you did $10,000 in net income, right? And if it's higher than that, and you can actually show that you did $30,000 or $40,000 in net income from the operation, fantastic. But at least 1 year business tax return will be required for the loan or line of credit. On the flip side, getting approved for some business credit cards for your company, those typically do not require any form of financials for the company. So there's no tax returns, no bank statements, no profit and loss statements or debt schedules needed. It's a much more streamlined application. In previous videos, I've covered how that application process can occur. There's a couple of different ways. I won't dive into that right now because I've already covered it. But to keep in mind, establishing business credit, getting some funding under your company that doesn't report to your personal credit file. The business credit card is the key to at least get started. And then once you have the financials, now the business loan and the business line of credit applications can become applicable. And so as you keep in mind comparable accounts, right, making sure if you're given the opportunity to increase your credit limit on the personal credit cards, no impact to your credit score, meaning there's no inquiry, there's no hard credit check. Take advantage of that when it applies. Sometimes you'll just log into your account and you'll see a larger credit limit because of spending history. So if that happens, that's even better, right? The credit issuer did it on their own. And then also if you're, applying for, let's say, an auto loan. Some people ask, hey, should I get the auto loan under my business? My main rule of thumb I like to recommend is if you are going to be the one primarily in the driver's seat of that vehicle, just get it under your personal, even if you're using it for business activities. Number one, you can still write off that expense, even though it was a personal auto loan, as a business related expense. If you're using the vehicle for business purposes, you can still document, write off the miles driven for business activities. And if the vehicle is exclusively used for business, you can work with your accountant and make sure you can take advantage of writing off the actual cost of the vehicle for the purchase. But that auto loan will report to your personal credit file, and that will help the comparable account as an installment loan on your personal credit that's reporting. And that can lead now to getting approved for a loan on the business side. So bare minimum, like an auto loan is really good to have on there. Obviously, mortgage, if you have that on your personal credit file, even better. And then unsecured personal loans, obviously, too. But that is a big question I get sometimes about the auto loan situation. Again, if you have employees that are going to be primarily in the driver's seat, yes, I would recommend trying to get that auto loan under your business if you're not going to be the one driving, just for liability purposes, protecting your company. But yeah, I hope this video was helpful. Again, you want to make sure you're in the strongest position as a borrower before you pull the trigger on any applications to submit, whether it's for, again, a loan, a credit card, a line of credit. And so hopefully this was helpful again. If you have any questions, let us know. Feel free to leave a comment on this video. If there was anything on here that you found to be extremely helpful that you weren't aware of in the past, or maybe if you have further questions and want me to make another video elaborating a little bit more in a specific area, feel free to throw it out there, and look forward to seeing you on the next video.